You are welcome to this crash course on fixed income investments. What you need to know. Fixed income investments. What you need to know. So it's going to be a crash course, and it's something you can consume in one sitting. So quickly, let's go into it. So what do we have for us in this course? Number one, what is fixed income investments? That will be module 1. Module 2, we look at examples of fixed income investments. Then 3, we look at why you should invest in fixed income investment. That FII is fixed income investment. That is the acronym for fixed income investments. Then number 4, we look at what to consider before investing in fixed income investments. Then what are the challenges with fixed income investment? Because there is no investment here on earth that does not have its own challenge or the other. But one thing I can tell you, that fixed income investments is one of the safest investments you can ever put your money into, because some of them are so safe that we call them risk-free assets in the financial management world or in the investment world. We call them risk-free assets. So you will get to know it as we move on, because once, especially if you know that you don't like taking risk, then the best thing is to just stay with fixed income investments. And once you now get comfortable in your skin with fixed income investment, then you can now begin to graduate to flexible investment that gives flexible return. So let's jump into it. What is fixed income investments? Fixed income investments refers to those types of investment that pay investors fixed returns until they mature. Fixed income investment refers to those types of investment that pay investors fixed returns until they mature. So it means by the time you are investing in this kind of instruments or securities, as we call it, you can hear the word security, you can hear the word instruments, you can hear the word assets. We use them interchangeably. So don't be confused when I say security, instruments, investments, or assets. Now, when you invest in such instruments, in any investment that is fixed, that is called fixed income, it means that you know what you are venturing into right from day one. You know your expected return. What you are expecting, that's why it is fixed income. So it is not as if when you want to start, they are telling you that, oh, it's going to be 20% per annum per year, because most investments is usually stated, the percentage that will be in return is usually stated per annum, which is per year. Which means they will not tell you that it is 20%, and at the end, maybe when your interest is to be paid, they are now paying you 18%. Based it on the performance of the economy. The economy was down. The reason why we couldn't do it is because there is economic instability. No, that does not apply to fixed income investments. Fixed income investments, from the day one you are putting in your money, whatever interest that is being promised to you, that is what you are going to receive. So it is not subject to economic performance. It is not subject to economic instability. It is not subject to the performance of the market. It is fixed. And once you know that you are the risk averse type, or you want something that is sure, you want something that is certain, it is better you go for this kind of investments, especially if you are just starting out as a beginner. It will help you to understand the terrain of investments, of what investment is. Unlike you going for equity, going for shares and stocks investment, that maybe if you are investing 1 million naira, for instance, your 1 million naira can go down to as low as 800,000, can go down as low as 700,000 naira at times before it traces back, and some may not even retrace. But for this, if you are putting in 1 million naira, your 1 million naira will remain 1 million naira till the end, plus the interest you are going to receive, and the interest also is fixed. So which means you are receiving a fixed amount, not just fixed amount, it is going to be on a fixed schedule, which means the time also is fixed. If you are investing in fixed income investments, as we are going to be going into the examples very shortly, When they say they are paying you quarterly, then it is quarterly. When the issuer is saying we will pay you monthly, then it is monthly. If the issuer is saying, even though there's no one like that is monthly, the ones we have is usually quarterly and twice semi-annually. So which means if you are being told by the issuer that we are giving you quarterly, it is quarterly. Even in most cases, the dates of payments would have been stated. The date that you are going to be paid would have been stated. If you are being told by the issuer that it is semi-annually, you can be rest assured that it is semi-annually. And there are some fixed income investment that you even receive your interest right from day one, from the beginning. You are going to get there. You are going to receive your interest from the beginning. I hope you understand why some it is at the end, at maturity, that you have it. And even whether you are now investing in the one that will give you your return on investment, which is your interest at the beginning, or whether it is quarterly or semi-annually or at the end, one thing that is certain, that at the end of the investment, at the maturity of your investment, your capital, which is the amount you invested in the first place, will be given to you, will be paid to you in bullet form, which means it's going to hit your account once. If you invested 1 million naira, at the end of it, 1 million naira is going to come back into your account. Except maybe your interest is now at the end. That's when they pay you together. Let's say you want to invest 1 million naira at 20%, and 20% is at the end, not quarterly, not at the beginning. Then, which means at the end you are going to receive 1.2 million. For instance, if it is the one that is going to pay at the beginning, which means if you are investing 1 million naira, 200,000 naira would have been given to you at the beginning, which means they will only deduct 800,000 from your account. At the maturity of that investment, 1 million naira will be given back to you. I hope you understand. Now let's move on. Fixed income investment give regular and predictable income, usually as interest. It gives predictable, regular and predictable, so you can predict it. So it is not whether or not, it is not hinged on the performance of the market. It is not subject to the performance of the market. No, it is certain, it is predictable. You can bank on it. That's one thing about fixed income investments. It is a way of growing your money without taking too much risk. Just like I've been saying, if you know that you don't like taking risk, then best thing is you go for this kind of investments. It is a way of growing your money without taking too much risk, because it's one of the safest form of investment that we have. I hope you are following me. Okay, thank you. Now let's go to examples of fixed income investment. Examples. Now, the first on the list is what we call bonds. And when we talk about bonds, we have it in different forms. We have bonds in different forms, especially government bonds, because we also have corporate bonds. We are still going to get there. Just be patient. Number one we have when it comes to bond is FGM bonds. FGM bonds. FGM bonds is usually offered to the public, and return is paid twice in a year. Return is paid twice in a year, semi-annually. And one beautiful thing is that even if you don't have what it takes to buy in the primary market, to invest in the primary market, which is with the DMO, Debt Management Office, you can always get it in the secondary market, where it will be denominated in lower amounts. That's FGM bonds. Now I need to say this, that there's a difference between FGM bonds and FGN savings bond. There's a difference. The minimum in the primary market when you are investing in FGM bonds is 5 million naira. It's 5 million naira. So that's why the federal government, through the Debt Management Office, now came up with what we call the FGN Savings Bond, Federal Government of Nigeria Savings Bond, for retail investors, those who cannot afford to invest 5 million naira, a large chunk of money, because FGN bonds is majorly for institutional investors. It is these institutional investors that now, after they have invested their money in it, they now bring it to the secondary market so that people can buy. People who don't have the large chunk of money, so that they can now buy at lower denominated amounts. But federal government now decided to make it easy for retail investors, so they came out with FGN savings bonds. FGN savings bond usually comes out every month. It's usually offered for subscription every month, and you receive your interest 4 times in a year. So let's say, for instance, it is 17%, and it's usually between 2 to 3 years for FGN savings bond. For FGN bonds, it's usually longer than 3 years, 4 to 15 years. The one that was done last is, I think, 10 years, which is Sukuk bond. So FGN savings bond, the interest is paid quarterly, which means if you are investing, let me say 1 million naira, let's use an hypothetical figure, a round figure now, 1 million naira. It means at the end you will be paid 170,000, because it's at 17%. So that is your interest. That 170,000 will now be divided into 4. It will now be paid to you quarterly. I hope you understand. And with as little as 5,000 naira, you can invest in FGN savings bond. If you are looking for step-by-step guide on how to invest in any of these fixed income investments, kindly move on to our premium course. Just go back to the home page, you will see premium course. You will get it there for a minimal fee. Do you understand? It's coming at a minimal fee. Let's move on. So that is FGN savings bond. So you see step by step how you can invest in it, and how you can invest in any of these fixed income investments. And also there will be a course where you will be taught how to build your portfolio. It's a comprehensive course than this, more comprehensive, how you can build your fixed income investment portfolio, how to apportion it so that you'll be able to mitigate risk and also maximize your return. What are the things to look out for? That one is a comprehensive course. It's also, you can check on the premium course. Now let's move on. With as little as 5,000 naira, you can start FGN savings bond with as little as 5,000 naira. Now the next one is called subnational bonds. Subnational bonds. When we say subnational bonds, it simply means bonds that are being issued by state governments. So state governments are permitted to issue bonds. So at times they need money. They want to borrow money from the public, because I need to say this, that bonds is simply means government borrowing money from you, and in return they pay you an interest. That's why it's categorized as one of the safest form of investments. It means government borrowing money from you, and in return they give you an interest. That's why it's categorized as one of the safest form of investment. So when we talk about subnational bonds, let's say for instance Lagos State needs money to fund a project. They now come to the public, please, we need money. So you can see something like Lagos State bonds, Lagos or Osun State, Anambra State bonds. They can give it one name, but you will know the state that is issuing it. I hope you understand. Then the last one, which is government agency bonds. Government agency bonds, which means government parastatals, they are also permitted to issue bonds to the public. So maybe they want to carry out a particular project, they can issue bonds that, okay, we are giving you this percentage if you give us this amount. And they will usually come through stock brokerage firms or through issuing houses. That's the way government bonds work in general. So as at the time of making this video, the interest rate is currently 16 to 21%. 16 to 21%. And the inflation rate of Nigeria as at the time of making this video is 23.71%. So you can see that it makes sense. Rather than leaving your money idle in the bank, why can't you just begin to invest in fixed income investments? I hope you are getting value. Okay, so at the end, please, you can drop your comments in the comment section that you got value please insert your comments, review it. What was your experience concerning this at the end? We are still going on. So the next type of fixed income investment is what we call Treasury Bills. Treasury Bills. Treasury Bills is similar to FJA savings bond, but one thing about Treasury Bills is that it's still you lending money to the government. You are lending money to the government, and government is paying you an interest in return. And one beautiful thing about Treasury Bills is when you are getting it from the primary market, which means directly from the government, you are paid upfront. Your interest will be paid upfront. We usually call it coupon rates. You are paid upfront. And how can you invest in Treasury Bills? You can tell your banker that you want to invest in Treasury Bills. If you are investing through your bank, some banks will tell you the minimum is 100,000 naira. For instance, I know Stanbic IBTC is stated categorically, if you are investing through them, it is 100,000 naira. But one of the other ways you can invest, let's say 10,000 naira, 15,000, 10,000 naira, 15,000, 20,000 naira, is to go through fund managers. You can go through fund managers. Personally, for instance, I use some of the fund managers. Like when we talk about fund managers, we are talking about asset management firms that are licensed by the Securities Exchange Commission. I'm not talking about investment apps. No, not investment apps. I'm talking about fund managers, licensed stock brokerage firm in Nigeria. Go through them. So as low as 10,000 naira, 20,000 naira, you can invest in Treasury Bills if you are going. So there's no cause for alarm. It is not necessarily you go through your bank. But one thing is that the interest rate being offered by banks, it's somehow lower than the one offered by the fund managers, because fund managers, more or less, like it has come to the secondary markets. So there's also still another course, if you want step-by-step guide on how to invest in Treasury Bills. In the premium course is also coming at a minimal fee. So that is Treasury Bills. And as at the time of making this video, now Treasury Bills is majorly for 1 year. Maximum you can do for Treasury Bills, the tenor is 1 year. And we have the 91-day bill, we have the 182-day bill, and we have the 364-day bill, which means you can either invest for 91 days, 182 days, or 364 days. That's when you are going with the banks. When you are using the primary market, and in the premium course, I'll be using my own, the one I use, one of the licensed one. It's one of the platforms that offer one of the best rates in Nigeria, one of the best rates, and you can see as low as 41 days, 28 days, because people are there that they want to sell. Secondary market activity is happening on that app, so you can always get it there. I hope you understand. So you can go for, if it is from the bank, from the primary market, you can do 91 days, 182 days, 364 days. Let's move on to the next one. Corporate bonds. Corporate bonds is similar to government bonds. The only difference is that corporate bonds are issued by private companies, private parastatals, and it's usually for a long period of time. When you want a fixed income investment that is from the private sector, that is short, for a short period of time, that is what we call commercial paper. So you can see they are side by side. Corporate bond is usually for a longer period of time, and everything about the company will be stated in the prospectus that is being issued out. In the issuing paper, you are going to see it, the interest rates, the terms and conditions, the credit rating of that company. Is the company credit worthy? You are going to see it from the prospectus that will be issued out. Now the next one, and as at the time of making this video, is 18 to 25% depending on the company, and please, you need to focus on the credit rating of the company. Commercial paper is next. Commercial paper offers between 23 to 27% per annum. Commercial paper simply means companies coming to you to borrow money for a short period of time, usually between 15 to 270 days. The maximum I've seen is 270 days. and it's usually between 23 to 27%. But so many things goes into corporate bonds and commercial paper. So if you know that you cannot take risk, because these are medium risk investment, unlike treasury bills and government bonds, those ones they are low risk investments. When I say government bonds, please, it is federal government I meant, not subnational bonds, not government agency bonds. Federal government bonds and federal government of Nigerian savings bond and treasury bills, those three are the safest investments in Nigeria. They are categorized by us, the financial managers, as risk-free assets, risk-free investments, even though there is no investment that is risk-free. But ever since, one thing we know that all over the world we call them risk-free investments. So commercial paper also, the interest rate is high, and you are also paid upfront if it is from the primary market. But most of the times, the minimum you can invest in commercial paper is 5 million naira. 5 million naira, except you come to the secondary market, and it's rare. And one thing about commercial paper, if it is a company like Dangote, MTN, Airtel Africa that is issuing a commercial paper, within a twinkle of an eye, it is oversubscribed, because the credit rating of these companies that I just mentioned, the credit rating is high. People believe so much in them that these companies are credit worthy. They are credit worthy. I hope you understand. Let's move on from commercial paper. Fixed term deposits is another fixed income instruments or fixed income investments. Fixed term deposits, it means you fixing your money for a period of time. One thing about fixed term deposit, if you go to banks, you'll be offered a ridiculous low rate. That's why the gap margin is much, 8 to 24%. But there are some issuing houses, when you do fixed deposit with them, they can offer you as high as, I've seen 24% on one of the apps I use, the same app I use for treasury bills. So fixed term deposits, you can also go for that. You can discuss with your banker, but just like I said, banks usually offer a lower rate. But some of these licensed stock brokerage firm, licensed fund managers, or licensed asset management firm, they offer high rates. Then the last but not the least is fixed dollar fund, more or less like fixed mutual dollar fund, usually between 6 to 8%. This is if you know you cannot take risk of investing in US stock. Maybe you want to invest in foreign currency and you are not ready to take risk, then you can go for dollar mutual fund. It's usually between 6 to 8%, but you need to do your calculation whether to invest in Nigerian mutual fund or to go for dollar mutual fund, because I did a calculation of recent, people saw it online for the clarification that Nigerian instruments, Nigerian asset fixed income investments is paying more now by the time you invest for a year, except maybe something else happened to the naira. There's another devaluation that really affects the naira, which is unlikely, unlike what happened during the first year of Tinubu when the naira was floated. It is not likely. But if it is not likely, then it is better to just stay with fixed income investments in Nigeria. You can see the interest rate by the time you do your calculation and you convert your naira to dollar. If you are in diaspora, then there is no cause for alarm. You can do whatever you want to do in the country where you are. But if you are in Nigeria, do your calculation, press your calculator, then I think at the end you will know which one is best for you. Why should you invest in fixed income investments? Why should you invest in fixed income investments? Why should you invest in fixed income investments? Why is it beneficial to you? Number one is predictable stream of income. You can bank on it. You can use it to complement your active income. You know, fixed income investment, the income coming for you is passive, which means your money is working for you. You put in your money, and without doing anything, your money generates return for you. So predictable stream of income. For instance, FGN savings bonds that pays 4 times in a year, you can decide to be using it quarterly. Now, I'm expecting this social amount this quarter, and you know it is fixed, so which means you can budget with it. That's one beautiful thing about fixed income investment. You can budget with it. So it gives you predictable stream of income. If it's just like landlords that have houses and they collect rents, at the end of the year they know what they are expecting. It is yearly. So if we are investing in FGM bonds, for instance, the Sukuk bond that was done last, it was oversubscribed. People subscribed to it. The government was looking for, I think, 300 billion. Eventually they got like $1 trillion. That's how to tell you that people are investing in fixed income investments. So don't let anybody cajole you with, oh, it does not hedge against inflation. The question is, which investments in Nigeria hedges against inflation on a short run, not long run? You know, most of these investments, they are short-term investments, except for FGM bonds and maybe corporate bond that is somewhat long-term in nature. But I can even tell you that there are some people who invested in FGM bonds at 27% 2 years ago. Was it 2 years ago, 3 years ago? 27%. Currently inflation is at 23.71%. Is it not hedging against inflation? So which investment hedges against inflation on a short run? Not even real estate. Maybe it's only shares and stocks, and that's if you know how to invest in shares and stocks. And if you are interested in shares and stocks, we have a free course on it. You can check it out. Free course to get you started in the shares and stocks investments. If you really want to hedge against inflation, go and watch it. Then if you are now fascinated by it, you can take the advanced course, which is the 2.0, which is under the premium course. But one thing is, you will learn and you will not be a novice. You will no longer be a novice when it comes to the issue of investment again. So fixed income investment gives you predictable stream of income. What is number two? Number two is capital preservation. The moment you leave your money in the bank, your money is depreciating day by day. The value of your money is depreciating day by day. What your 1 million naira can buy, what it could buy last year, it can no longer buy it this year. It is called inflation. Inflation is eating it up. So one of the ways to preserve your money, to preserve the value of your money, the value of your capital. When we say capital, it means the money you are investing into that instrument or into that asset. That is what we call capital. So when you want to preserve the value of your money, you put it in fixed income investments. It may not totally hedge against inflation, but at least to an extent. You saw the interest rates that these instruments are offering close to the inflation rate. And don't forget that you still have your active income working for you. You are working, you have your 9 to 5 job, or you have a business, or you have a skill that is giving you active income. So this is just a plus. We are saying that don't leave your money idle in the bank, rather than putting your money in the bank and the bank is just making money with your money, giving you nothing, little or nothing in return, giving you 0.25%, giving you 3%. Put your money in fixed income investment. It is safe and secured. Most of them are safe and secured. What is number three? Safer than other forms of investment. Yes. Even if it is commercial paper, for instance, Dangote cement is usually commercial paper. You can invest in it and go to sleep because Dangote cement will pay back. MTN will pay back, especially companies with solid credit rating by GCR and Agusto. Those are the credit rating firms we have. We have 3 of them. So they are safer than other forms of investments. FGN savings bond, FGN bonds, Treasury bills, they are safe. Even commercial paper when done right. I hope you understand. They are safer than other forms of investments. Number 4, high inflation makes it attractive. The reason why you see people oversubscribing, as at today that I'm making this video, when I'm making this video, I'm recording this video, FGN savings bond will be out today. And definitely people are going to oversubscribe because of the inflation. People are now getting aware that they can invest with the government and their money is safe. and they are taking advantage of it. So because of high inflation, they would rather put their money in treasury bills or in commercial paper or in FGN bonds or FGN savings bond. At least it will take care of a larger part of portion that inflation could have eaten up. So I hope you get my point. So high inflation is making it attractive, so that's why you also need to get into it, so that your money will not just be depreciating in the bank. What is the last one? Diversification. You have had it. Don't put all your eggs in one basket. Even if you have been investing in shares and stocks, you've been investing in real estate, there's nothing bad investing in fixed income investments. You are diversifying your investment. You are mitigating your risk. You are reducing your risk to the barest minimum, because when you diversify, your risk is being reduced. Why? Because if you are only investing in one asset, what if something happens to that asset or that instrument? What if there is a downturn in the market? Maybe in equity markets, in shares and stocks markets, they are in a bearish market. Bearish means the market is going down. Prices of stocks are going down. But when you have fixed income investment, because at that point in time you may not be able to sell your shares because you cannot be selling at a loss. So but when you have your investments in fixed income investments, when you have your investments in fixed income investments, you can at least liquidate that. And another reason is that why you should invest in fixed income investment, it is most of them are liquid, which means you can easily convert them to cash. Most of them, they are liquid. FGN bonds is liquid, treasury bills is liquid. You can turn them to cash. But some platforms will give you terms and conditions. Maybe it's only after 30 days that you cannot liquidate, depending on this, maybe secondary markets that you are selling it. And if it is even the primary markets, you just need to tell your officer to tell that I want to liquidate my investments, and they will liquidate it for you without penalty. I hope you understand my points. Let's move on. What are the factors to consider before investing in fixed income investments? What are those factors? Number one is goals and objectives. What is your goal for investing? This will help you to know the kind of fixed income investments you should go for. Please, let this be clear. Let this be clear. If what you want to invest for is maybe you are just looking for a place where to put your money for the next 6 months, you don't go for FGN savings bond then, because that one requires 2 to 3 years. You go for treasury bills. Once you know your goal, the reason why I'm investing is that I don't want to leave this money I do for the next 90 days, 91 days. Then you put such money into treasury bills. I hope you understand. Know your goal and objective. It will guide you. Number two is your risk appetite. Your risk tolerance. Can you take on risk? If you know that your risk appetite is low, then go for FGN bonds, go for FGN savings bond, go for treasury bills. Don't go to commercial paper, don't go to corporate bonds, because those ones comes with medium risk. Even though some are safe, just like I've mentioned the credit rating of some companies, but nevertheless, you just want something that is so safe that you don't need to disturb your head. You will not be perturbed or disturbed or apprehensive in any form. I hope you understand. So that is, consider your risk appetites. Number three, risk to reward assessment. What is the risk involved? What is the reward involved? Do an assessment. When you do the assessment, it will help you to know, there are similarities between treasury bills and commercial paper. But when you do your risk to reward ratio, when you look at the risk involved in commercial paper that is being offered to you, maybe one company that is not well known is offering a higher percentage. Let's say for instance is offering 24%, and treasury bills is offering you 20%, and you are looking at the risk involved. The risk is high. You are looking at the interest rates. You will not just look at the interest rate alone. You need to consider the risk that is involved. When you consider the risk to reward ratio, you may decide to go for treasury bills and say, I cannot take this risk just because of 4%. I will not go for a company that will not be able to pay back your capital. let alone your return, let alone your interest. I hope you understand. When you consider risk to reward assessment as well, that is what will help you to know, okay, should I go for government bonds or I should go for corporate bonds? If you can take on risk, you have done your assessment well, you can decide to go for corporate bond, you can decide to go for commercial paper rather than going for government bonds or treasury bills. I hope you are getting it. Number 4 is duration and time horizon. You want to invest for 2 years or 3 years, you are now going for FGN bonds. That's not the one to go for, or corporate bonds. You go for something like FGN savings bond. Let the duration, time horizon, let it also guide you. How long do you want to invest? If you want to invest for less than a year, then you know that you should stick to treasury bills or commercial paper. Let your duration, let it also guide you, your time horizon. Then the 5th one is liquidity. How easily can I turn this asset to cash? For instance, if you are investing in a company that is not so well known and that company is issuing a commercial paper, if you are buying such a commercial paper, you may not be able to liquidate it on time, because many people are afraid from buying such commercial paper, from investing in such commercial paper, so you may not be able to liquidate it. But if it were to be a company like, maybe Dangote, Cadbury, Nestle, these are well established companies that has solid credit rating, so people can want to buy from you in the secondary market. Then the last but not the least is investment platform. This is crucial. There are some investment platform that charges you twice when you invest in them, and they are common. Why? Because they are not licensed directly with the government, so they are more or less like a third party to those licensed stockbrokers, licensed asset management firm. So those ones have their charges. Let's say, for instance, those ones are charging 1%, hypothetically. They will also have to charge their own. I hope you understand. So consider investment platform. Go with investment platforms that are licensed and registered by Securities Exchange Commission. And if you really want to come into our inner circle, where we talk about fixed income investments, it comes with a yearly subscription. You can chat up with the admin that you are interested in our fixed income investment, where we come up with offers. As soon as the offer is out, you will be one of those that will get it, and it comes with a minimal fee for a year. It's a year subscription. I hope you understand. Fixed income investments community. So let's talk about the cons, because I will not tell you all the good things about fixed income investments and not talk about the seemingly cons, the downside of it, so that you know that every investment has its own risk. Number 1 is what we call default risk. This is the issuer's inability to pay returns on a timely manner. So for instance, you invested in a corporate bond, they said we will be paying twice a year, but unfortunately maybe they delayed or maybe they couldn't pay. That's why you also look at the credit rating, credit worthiness of the company you are investing with. As for FGN bonds, FGN savings bond, you don't have issues with that. At times for FGN savings bond that is paid quarterly, they may default, maybe they may delay in paying, maybe 2 days, maximum 3 days at times. But you will get your money. But when it comes to investing with the private sector, which is either commercial paper or corporate bond, please, you need to understand that there's default risk, the issuer's inability to pay returns on a timely manner. Number 2 is liquidity risk. This is the ability to quickly sell an instrument. Most fixed income instruments maintain a secondary market. However, MPR, interest rate, supply and demand may alter the liquidity of fixed income instruments. Just imagine, let me cite this example, what we call liquidity risk. You invested in FGN bonds for, let's say, 10 years, and this interest rate that you are being offered is hinged upon the MPR, which you call the monetary policy rate by the federal government of Nigeria. Now you invested at the rate of, let's say, 20% now. Now The interest rate, the current one that is now being offered, is offered at 23%. The question is, and you want to liquidate your own. You want to liquidate your own at 20%, who will buy it from you? They would rather prefer to go for the one of 23%. So at times there's liquidity risk because you have bought higher. That's why most people that invest in fixed income investments, they usually hold till maturity, which means you hold it to the end. You don't even bother to sell. That's why I said look at your time horizon. If you know you want to invest for 6 months, don't go for FGN savings bond, go for Treasury Bills, go for the one that suits. There's always time. Treasury Bills is commercial paper, is good for anything less than 1 year. 2 to 3 years, go for FGN savings bond. Anything above 3 years, go for corporate bonds or FGN bonds. If it's something that is flexible, you want something you can liquidate at any point in time, go for fixed term deposits. You can see that there is time for everything. So that's how to mitigate liquidity risk. Then we have interest rate risk. This happens when interest rate changes occur, just like the example I cited in liquidity risk. When interest rate changes occur. Then we have the next one, which is purchasing power risk. It is the risk that over time inflation will lower the value of the returned principal. By the time you are collecting your money back, your principal invested amount at the end of 1 year, inflation in one way or the other would have eroded it a little bit, as long as there is no high inflation in the economy. A little bit over time in the next 10 years, over time. This means that an investor will be able to purchase fewer goods and services with the proceeds received at maturity. But don't forget, you have also received your interests. So the goal with fixed income investments is don't leave your money idle in the bank and invest in an instrument that you know your capital is safe, your interest also is certain. Then the last but not the least is it lacks compounding effect. When we say compounding effect, it means your interest earning interest for you. This can be done manually, but definitely it is somehow tiring and cumbersome, and it requires so much discipline. So your interest will not earn interest for you. You will just be collecting your interest back. So your interest cannot automatically, it can be done manually, earn you more money unless you are disciplined enough to reinvest manually. So if you are interested in any of these that we have spoken about, kindly go to the premium courses. You will get it there. Thank you so much. For further or private consultation, you can WhatsApp the instructor on this number. Just send me a WhatsApp that you're interested in fixed income investments, then we get started from there. You can also join our fixed income community where we drop updates on fixed income instruments that are available, and it goes for a 1 year subscription. I hope you understand. And you can also ask any question there. So it is not enough for you to go through this course. Take action. Thank you so much for staying to the end. God bless you. Do well to go through the page, free courses, premium courses, and see whichever suits you. More courses are coming definitely, especially in the area of finance and investments. God bless you.